All right, welcome back. Let's get to this bullish call now on that company right there. General Electric shares up 5% today. Goldman Sachs reinstating the stock with a buy, a $10 price target. Of course, it's down almost 40% this year. We've made it our call of the day. Jenny, what do you do with this call? They say they're making progress to be a leaner, structurally more productive company with better capital discipline. They're going to emerge from the pandemic a, quote, stronger company. Airline travel, they point to, going to resume. Expectations are discounted. They're also under-earning their potential in power and renewables. Buy it or no?
No, not for me. That might all be true, but we need to remember that this is an unbelievably dense, complicated company. In fact, I tried researching it about 3 years ago and couldn't get to a great conclusion. I think to be able to really understand GE, you need to be a full-time research analyst and spend 40 to 80 hours a week working on it. So when I read the Goldman call this morning, my knee-jerk was to say, like, oh, that's really interesting and that's really compelling. And then I took a step back, remembered how complicated it was, remembered who I think is the best analyst on this, which is Stephen Tusa at JP Morgan, and revisited where he stands now. He's a neutral, and he's not really positive. In fact, I was just reading a note of his where he says he sees a company that continues to contend with its past, unable to move forward, with a mosaic of negative signals suggesting no quick turn. So I really stick with him on this. I think he knows it better than anyone and has the ability to go deep and form an opinion where most of us can't do that.
Michael Farr, so Jenny says until Tusa speaks, she's not buying it in more ways than one. Mm-hmm. What about you?
Mm-hmm. Right. And Jenny makes a lot of sense, and her points are absolutely excellent, and I kind of agree with them. You know, I want to buy GE, and I haven't. And I want to buy it only for one reason, and that's Larry Culp. You know, you watched what he did at Danaher. I've known Larry Culp for years. He knows how to manage a big conglomerate. And somehow my purchase of GE, which I'm dying to make, I just can't bring myself to do it, is a vote of confidence entirely in Larry Culp. When you start to dig down, though, they can't quantify their exposure to the long-term care insurance business. They have a power business that's kind of a disaster. Their deal timing and trying to put things together hasn't been really good. So I think Jenny's entirely right with her caution. Mine would be more of a bet on Culp, and I'm still not ready to pull the trigger.
So you own Raytheon, Michael. Jim, you do as well. Yes. What's the best name, Jim, you have in the industrial space right now?
Well, look, the one that's got the best bid to it is Caterpillar. And you just look at the chart. It just set a new 52-week high. And that's an easy one to simply say. That you simply say, look, it's got the supply chain reshoring going on. It's got infrastructure potentially coming. I think that's just the easiest one to be in. You can take some more speculative bets, and you see I'm in Boeing. You know, that's one, and I've said before, and Steve and I have gotten into it on this, that it's a call option on the commercial aircraft business. Why not take that call option instead of General Electric? I'm not hating on General Electric, but at least with Boeing, you've got this massive defense business underneath it, and you've got the call option on the commercial business for when recovery hits. Why don't you weigh in then, Weiss?
I'm going to give you the chip names. They're going to all the industrials. They're taking the pure robotics into the warehouses, into the factories, every manufacturing. That's going to be chips. But in terms of GE, look, to me, this is no stock left behind. This is where you go when you can't find anything else. They sold their growth, their healthcare businesses. If you're going to buy leverage to a reopening trade, don't go here with their balance sheet, even though it's been improved. And perhaps the only reason the company hasn't filed bankruptcy is Culp. But go to the airlines. Well, why go to derivative? The airlines are much higher beta than GE is going to be. So I wouldn't touch it here. I just wouldn't go near it.